pandemic, or because this recovery has been so front-loaded over the course of 2021, what we're really expecting is that for 2022, it will be a year of moderation. So what we're expecting is to see Brazil somewhat reverse to those GDP growth rates that we're more accustomed to, so the historic levels of GDP growth rates. So at the moment, we do expect Brazil to grow at about 2.1% this year. I would say that our bias is also to this downside, as we see a growing levels of pessimism associated with that. But the main idea here is that we're going to see Brazil's growth rate converge a little bit more quickly to those historical levels of growth, a bit more quickly relative to the other Latin American economies that are still going through the process of regaining some of those pandemic losses. But it's not to say that we're still not going to see some benefits from the easing of those pandemic conditions, especially when we consider the recent gains that we've seen on the vaccination side. So here we know that we see here that Brazil has definitely been able to expand its course of the vaccination campaign. And even though we're trailing behind some of our regional partners, we are on track to immunize about 80% of our population by Q4 of this year. We've surpassed the US in terms of percentage of population that is partially vaccinated, and we do expect to also surpass the United States in terms of fully vaccinated by the end of October in the early stages of November. So we see that we're really being able to consolidate those high levels of vaccination that are super important for a more sustainable and less risky reopening of the economy. And another element that also adds to the overall nuance of this vaccination story is that we're not only seeing these high levels or this high consolidation of vaccination, but we're also seeing that diversification of the vaccination campaign. So in the early stages of vaccination campaign, in the first 2 months, about 80% of the jabs that were being distributed were from Chinese pharmaceutical developers. What we see now is that over the course of the vaccination rollout, that percentage is much closer to about 35%. So now we're starting to see the implementation or the incorporation of those, for example, Oxford, AstraZeneca, Pfizer, Janssen, those vaccines that typically are associated with higher levels of immunity, as well as the fact as we're seeing a consolidation of the high levels of vaccinations themselves. So in a sense, we're getting two birds, one stone, and really consolidating that vaccination story. But to talk a little bit more about our B2B outlook, so not only do we consider the process of how recovery has unfolded across these different segments, but we also considered where each of these different industry verticals are in their process of business cycle. So it's by taking those two considerations in mind that we offer some of the following insights. So here are some of the three sectors that we think are going to have better than expected or better growth rates relative to the average next year. So hotels and restaurants, as well as transportations, are definitely going to be two areas or two sectors that are going to benefit much more directly by the increase in mobility levels, as well as just the overall easing of the long-lasting social distancing conditions that we still have at play here. And what we see is that particularly for hotels and restaurants, that level of recovery still has quite a way to go to get back to those 2019 levels. So ultimately, we expect that growth rates for this sector will probably be easier to achieve relative to some sectors that have already gotten back to those pre-pandemic levels. Now, for construction, we're still expecting some levels of opportunity to come, but the story is slightly nuanced on this front. So what we're ultimately expecting, or what we've ultimately seen so far, is that the main engine of growth over the course of the pandemic or over the course of the last 18 months or so has been the opportunities that have emerged in residential construction and the construction of residential projects. So especially when we saw those very expansionist monetary policy coming out of the central bank, that really facilitated a great expansion, a good opportunity coming from the residential side. Now, with a more contractionary policy coming out of the BCB, our expectations is that those opportunities should dampen. But really, what we're expecting to happen is that there will be a resumption of a lot of those different public infrastructure projects or different civil construction projects that were put on hold over the course of the pandemic. So what we saw in 2022 was that there was actually an underperformance of the budget in the Ministry of Infrastructure. And we're expecting that as we start to see some of the expenses associated with combating the COVID situation, as those start to ease, our expectations is that a lot of those projects that were put on hold should start resuming, and that should become the main growth engine moving forward into 2022. Now, for the next few segments, the main story here is that these segments will very likely see a moderation in the high growth rates that we've seen so far. So we see that over the course of the pandemic, these are some of the sectors that have actually benefited more from those higher growth rates, but we do expect to see some dampening of the growth rates and the opportunities that we've experienced so far. So for retail, our expectation or our projections is that we'll essentially see a normalization in consumption. Ultimately, what that means is that we're going to start seeing a lot of consumers incorporating those services expenditures that were lost over the course of the pandemic. So especially those higher ticket items associated with tourism and traveling are definitely going to start making a comeback as in-person activity consolidates, and that's going to take away some of the resources that consumers are going to have to dedicate to retail side. Now, on the manufacturing, we've actually seen quite a robust level of recovery unfolding over the course of the last year, but that has also been predominantly guided by the fact that companies are trying to reestablish their 19 levels of inventory. So especially as we saw firms struggling to adapt or to adequately supply the rebounding levels of demand that we saw, that was one of the predominant growth engines that we saw in the sector over the course of the year. And now that we're really starting to see companies get back to that level of equilibrium in terms of really matching supply to the existing demand, that will also dampen the primary growth engine of the sector. Now, financial services has definitely benefited and definitely outperformed over the course of the pandemic. We see that Brazilian consumers not only depended or relied very heavily on the auxílio emergencial, the fiscal stimulus program, but they also relied very heavily on credit to be able to finance their consumption. But next year, what we're really expecting is really a slowdown in credit demand. Why? Well, one of the predominant reasons is that we see a high level of indebtedness of Brazilian households. So we see here that there's actually been quite a significant increase in the level of household debt as a percentage income over the course of the pandemic. And now, as we really start to see a much more contractionary policy coming out of the central bank with about 5 consecutive interest rates hike over the past 5 months or so, that will probably discourage a lot of new consumers from taking out new credit. And what we're also expecting as well, and we'll discuss it in a little bit, is to see better labor market conditions in 2022 relative to the sluggish conditions that have unfolded over the course of this year. And in this process, that will also help allow consumers to use those newfound wages to pay down the high levels of debt that they have without having to take on new credit lines. And then to finish the B2B section off a little bit, we see here our expectations on the commodity side. So here are the consensus of where we expect these prices to end in 2021 and in 2022. And ultimately, what this graph really helps illustrate is that we are going to see a moderation in that external environment, but we're still going to remain above those pre-pandemic levels of 2019. So that ultimately means that we do expect to see some positive opportunities in both the agriculture and the extractive sectors. There's definitely some upside as well with the different situations that is developing on the energy side that we've had to contend with over the past few weeks. But we still do expect some level of moderation, particularly more guided towards agriculture, especially as we've seen a bit more difficulty in terms of the climate conditions that we've had to deal with this year, and that has definitely impacted the 2022 harvests. So here, just to very briefly resume or to summarize where we expect all these different industry verticals to really finish off the year. And I think we could definitely say that our bias is that a lot of these different industries will see a return to those pre-pandemic levels of activity, except for a few that have gained or have seen some structural changes that will allow them to outperform in 2022. And then to talk a little bit more about the opportunities on or how we've seen that recovery unfolded by different company sizes. We see here, and we do expect that in 2022, smaller SMEs will continue to have a limited investment capacity, especially when we compare it in relation to the larger corporations. So we see on the graph here on the left that even though there's been a slight decrease in that level of delinquency rate, overall that trend has grown over the course of the pandemic. And it's interesting to analyze that relative to the stability that we've seen on the delinquency rates of larger corporations. So I think what this also helps to showcase is that recovery has not reached everyone as of yet, and it still remains pretty fragile for some specific groups that are still pretty important for Brazil's economic activity, especially when we consider that more than half of the SMEs in the country still say that they're struggling to get back to those pre-pandemic levels of sales. And in this process of having a bit of mismatch between the levels of liquidity or the performance between SMEs and larger corporations, what we're starting to see really is high levels of mergers and acquisitions really taking shape over the course of 2021. So we see here that both Q1 and Q2 were actually pretty high in terms of the levels of activities that came out of that sector. And it really does showcase that we're starting to see a lot of companies that have much more ample liquidity are strategically using this moment to acquire firms that have been harder hit by pandemic, and really showcasing that they're using this moment to acquire companies in order to diversify their business and develop economies of scale so that they're better positioned for the next crisis.